Pankaj Murarka is with us now. Pankaj, let's begin the discussion with chemicals itself. We have been waiting for that recovery. Last couple of quarters, we have been calling that perhaps this is the worst, this is the worst. There will be recovery in a couple of quarters. But is there really light at the end of the tunnel?
Well, as far as chemicals are concerned, I think the sector has gone through a severe, massive, meaning slowdown in global demand, and there's been a destocking at the customers. And on top of that, there's been a slowdown in China and Europe as well, which is impacting global demand. And on top of that, we've seen price corrections as well. So I like to believe that we are near the trough as far as the chemical cycles is concerned, but it's still some time before we see an uptick in the sector as a whole. But clearly, what I'm seeing is when you look through some of the companies which have announced their results, the earnings are finding a trough. We've had earnings which contracted by about almost 25-30% for most of the companies from their peak earnings 2 years back. So probably now earnings are settling down and finding a trough, probably, but I think it will take a while before we see an uptick.
Details that I'm getting on UPL, the net debt has increased by $639 million in Q1 versus the year end that we had seen in March. So for the company, debt is as it is something which has been a problem, and the company has been trying to bring it down. They've done a couple of restructuring to do that. The seeds business has faced headwinds on account of the weather challenges is what they're saying. Overall, the volume was decent with a growth of 16% coming in, but there's a price erosion which is underway. So the price has eroded by 14%. There's a net debt which has actually gone up. So that is something that we are watching out for. And overall, the management is saying that the India crop business, they continue to make efforts to restructure the business through the strict credit policies and tighter credit terms. The contribution margins and cash flows have improved from the India business. You're also, the management is also talking about how the impressive growth has been seen when it comes to Europe region, because I think the growth there was almost 10%. The herbicide performance in Brazil also did well. So there are pockets which have done well for them, but there's definitely that miss coming in on the bottom line, Asha, which means that the stock is right now down almost 3%.
Yeah, almost 3%. Although having said that, the street was just about turning the corner around for some of these chemical names, and you did see some bit of buying actually kick in after what looked like a very, very elongated lean patch. Pankaj, what do you have to say about looking at how disappointing UPL's numbers have been?
I haven't had a chance to look at those numbers in detail, Aisha, but I think the global agrochemical cycle is going through a downturn. And there are price pressures. We've seen sharp erosion in pricing in global agrochemical, and there's been a bit of overstocking as well. So the companies are experiencing destocking, which is where sales momentum is low. So I think UPL, being a global agrochem player with presence across the world, will see all of this trend will reflect in UPL's numbers in that sense. And on top of that, clearly UPL has a significant leverage on the balance sheet. So the operating deleverage and the combination of operating deleverage and financial leverage just makes the downturn much more painful for UPL, I would guess.
While autos, of course, clearly seem to be the weakest link in the market right now. Escorts down about almost 6%. Eicher as well taking quite a bit of fall. That stock lower by about 5%. Similar is the case with the Tata Motors, Maruti, M&M. In fact, M&M was, remember, the top drag on the index even yesterday, even though the numbers were above estimates on all counts, and that was the case with Maruti and today with Tata Motors as well. Do you think, Pankaj, the market ran up ahead of earnings, at least in the near term, and perhaps that's what explains the weakness in the auto names?
Yeah, absolutely, Aisha. I would think so. We've had a ferocious rally in the markets. All of us know the last 15 months. The post-election rally has also been very sharp. I think there's nothing wrong fundamentally with the underlying economy or broadly with the numbers that we have had so far. They're pretty much in line. It's just that the markets have been a bit too ahead of earnings, given the strong liquidity flows and momentum that we've seen. So probably it's a time for markets to pull back a bit and spend some time or consolidate some time. I think broadly, directionally, earnings momentum and economy remains in good shape. So probably a pullback or some consolidation should be healthy for the market from a slightly more medium-term perspective. So I think any pullback in that sense should be a good opportunity for long-term investors to step in.
Okay, point taken. So that's a view coming in on some of the auto companies. What do you make of the platform companies, Pankaj? And you've been tracking the likes of Zomato, Paytm quite closely. Were you impressed by the kind of show that Zomato delivered yesterday? And if at all, do you think it's priced in, or do you think this is a blue sky territory now?
No, I think the numbers have clearly surprised us on the upside, and now everyone realizes that while Zomato, the food delivery business, has become profitable for a while now, and has been growing phenomenally well. But over the longer term, the bigger value will actually emerge from quick commerce business, which in case Zomato's case is Blinkit. So I think the combination of both these businesses, the numbers were really phenomenal. It's like hitting the ball out of the park. And more importantly, the visibility for growth continues to remain very strong over the next probably not only short or near term, but also from a slightly more medium term to longer term perspective. So I think the business is on a very strong footing. Obviously, valuations are rich, but the point I'm trying to say, or I always said, is in case of these companies, one, there is a very significant high operating leverage. So the revenue growth, a high revenue growth actually amplifies your profit growth. And secondly, these businesses, given their low penetration levels and incremental or significant increased consumer adoption, can sustain that high growth for a long period of time. And more importantly, some of these businesses have now started demonstrating pricing power. If you see in case of Zomato, they've increased platform fees, which was zero almost a few years back, to almost, I think, 5 or 6 rupees that we've started charging in most of the cities. So that's a reflection of pricing power these businesses are demonstrating. So I think these businesses have a long, long runway for growth.
So you're saying at 264 also it's a good buy for the long haul?
Absolutely, I think so. Eventually, I think some of these quick commerce players, the future of organized retail now is quick commerce. Some of these quick commerce players, be it Blinkit or maybe Instamart from Swiggy, whenever they get listed, probably will become as big as the largest retailers in India. And in this context, that businesses are still very small and they have a very long runway to go.
Right. Okay, Pankaj, stay with us. Lots more to talk about. We're going to quickly take a very quick break and come right back, discuss the markets on the other side. Right, back with closing trades right here in ET now. UPL continues to react to its numbers, not just operationally, but the fact that debt has also seen an uptick that's sizable. The stock's still tanking about 4% as we speak right now. Auto still under pressure. Pankaj, if the market were to fall a little bit more along with the rest of the globe, what should one's shopping list be like?
Well, Asha, I continue to remain very positive on IT. I think we're coming out of 2 years of cyclical slowdown in IT as a sector. And I think probably we are seeing initial signs of revival in IT spends globally. And probably once rate cuts set in US, probably starting September, we'll see that trend accelerate because global companies have been holding back on IT spends for a while on fears of US recession. And probably once those fears are put to rest and we start seeing rate cuts, I think we'll see acceleration there. So IT looks, and in the context of overall market, I still think valuations in IT are reasonable versus a lot of other pockets of markets. So that looks interesting. Apart from that, pharma or healthcare as a sector continues to look pretty decent because earnings there continues to remain very resilient, and there is incremental scope for margin expansions in the sector, especially coming out of US generics business for most of the companies which are focused there. And valuations still are reasonable in that sense. So healthcare is another sector which looks interesting. Probably, I would also expect probably in the second half of this year, we should see a revival in discretionary consumption in India because we've had a very sharp slowdown in consumption over the last 5 or 6 quarters. But I think probably we'll have the benefit of low base and probably a normalized monsoon helping agriculture and come into the second half of the year. So some of these consumer-related stocks which have underperformed over the last year and a half, they probably could be another interesting pocket of the market in that sense.
But given an option, Pankaj, would you be a subscriber to the Ola IPO?
Well, I think it holds a lot of promise from a slightly more medium to longer term perspective. So probably we'll rather wait for it to get listed and probably see how things play out before taking before investing into it. But I would think it holds a lot of promise because it's very clear that probably we've already reached some sort of inflection point where 5% of two-wheeler sales now are EVs. And usually it's been the experience that once you get to 5% number, you see a very sharp uptick in that number or the adoption increases very significantly. So I think the two-wheeler adoption of electric vehicles or electric two-wheelers in India has reached that inflection point. So I think over the next 5 to 10 years, we will see a significant increase in the penetration of electric vehicles within the two-wheeler segment. And Ola, if they execute well with their product suites and sales, probably they can they have a fair chance to be a meaningful player in the space.
So seems like it's a subscribe coming in if you're a long-term investor, and of course, if Ola is able to deliver on their promises. Thanks, Pankaj, for making time and speaking with us.
If you like this video, then like, share and subscribe to ET Now.